Hi, this is Zak Mir with the return of the UK Chartbreakers, basically the sweep of the most constructive FTSE 350 stocks. We're starting off with the FTSE 250 chart, which at the moment is looking quite well poised. Bounced off the 200-day moving average there around 19,000 and bounced above the neutral RSI 50 level. We had a good setup, actually, equivalent setup at the beginning of last month, but obviously that ended in tears with the Credit Suisse debacle. But second time lucky, hopefully, breaking the February resistance line there around 19,400. Above that, we're looking for as high as 21,500 perhaps over the next 1 to 2 months, and a nice risk-reward situation in the sense that if we go back below 19,000, that break to the upside probably won't happen. On to the stocks, and starting off with Auction Technology Group. Here the interest is that we've got bullish divergence of the lower lows for April, so that should hopefully, if it's a double bullish divergence, so we've bounced off the uptrend line in the RSI window twice. All we're waiting for now is to break the 50-day moving average around £6.55 to head up to as high as 7.20. But the main thing here is that we're looking for a proper turnaround in the shares after what's obviously been a rather horrific run since the middle of 2021. So let's see if that particular situation pans out. Ideally, we don't even get back below the 620 area, which was recent support for the shares. On to Doc Martens, which is a shoe that I've never actually worn for many reasons. But starting off here, another situation that looks as though it may have turned round. So bullish divergence there with the lower March and April lows. That final bear trap there on the 14th of April. And a beautiful little bull flag here, which the shares are in now between around 155 and let's call it 170. End of today close through 170, and we could have a turn around up towards the 190 area, which means that the shares would be trying to fill that gap down from January. So a decent recovery there, but lots of positives there on the chart, building from the bullish divergence and then that final bear trap down to the low of 130 that we had the other week. But looking for the £2 area, hopefully by the end of next month. Another stock which is looking as though it may be good enough to turn around is Direct Line Insurance. Here we've had a bear trap island reversal, so gap down in March and gapped up earlier this month. Held that gap. We love those unfilled gaps to the upside. And basically, we've got a situation now where support comes in at the 50-day moving average at £1.63, and above that we're looking for as high as £2.10 by the end of next month. So let's see if the bear trap there in Direct Line delivers the goods, but a nice risk-reward play versus the 50-day line. Onto a stock which has been heading for the stars over the recent past, Flutter Entertainment. Just worth looking at the chart here just to see what the trajectory is supposed to be, even though it's a bit late. Here we've got a rising trend channel from May last year, and top of that channel heading for £1.80, while we're above initial April resistance around £1.52. So maybe that's still something that people would shoot for. What tends to happen with these situations is that the final part of the rally tends to sort of stretch ahead, so maybe we'll see a reasonable breakout, or a quicker breakout than we've had over the last few months on that. Moving on to IWG, which again is something where we need those multiple signals to give us confidence that the turn has come. In this situation, we've got a broadening triangle that's been in place since November. And we've just had, like the FTSE 250 itself, a bounce off the 200-day moving average at £1.64. Looking for the shares to break a line of resistance there from last month. If we can do that over the next few days, that would be very pleasant. So call it £1.75. Above that, looking for as high as £2.20 over the following 1 to 2 months. The reason for the relative optimism here is the way that if you look closely, we can see that the shares left an uphill gap to the upside at the end of last month, which is a plus. In the near term, we've bounced off RSI 50. In fact, we've done that twice really in the recent past. And so really all we're waiting for now is a break of that resistance line there. 175 plus should do the trick after that strong candle on Friday. JD Wetherspoon is the next contender, and here you can see that despite all the moaning and groaning about Brexit-related factors, the shares have actually recovered very well since October, with the lows around £4. Current situation is that we've got a rising trend channel in place since back in September, and we've got a £9 resistance line projection target. That's valid at least while we hold above recent support around the 660 area. And if you're cautious, obviously you wait for a break of recent resistance around the £7.30 zone. But it does look as though the shares are just consolidating versus in a horizontal way, which is tends to be a good sign, versus the 670, 680 area. So already established the support there for that situation. Both the 50 and 200-day lines rising. So JD Wetherspoon looking healthy there. On to Moneysupermarket, and here we've got a situation where it looks as though we've got another sort of trending pattern here. Here the shares basically broke out back in February through the major sort of 220 zone. That's become new support, and above the 50-day line now around 240. We're quite confident of a move to the top of that rising trend channel from July as high as £3 by the end of June, and hopefully a bit sooner, but very strong price action there, with the support coming in above the 50-day line even on dips, and coming in above the neutral 50 RSI level even on dips for the shares in the recent past. On to next, where the shares have recovered very well from those from the nightmare zone back in the autumn around the £45 zone, currently breaking above the 50-day moving average. That's around £67. We had a gap close buy signal for the end of the week, so the gap there at £66.52 in the top there. So above that, looking for as high as £75 over the next couple of months, and not expecting any weakness here now below the £65 level. So relatively straightforward situation, we hope, and the RSI pushing above the neutral 50 level to end this week. So another great signal there from a good signal there from the stock. Looking at RollsRoyce as the next contender, and here you can see that shares obviously another big post-October recovery situation. We've got a broadening triangle there from basically the early part of 2020. Top of the triangle there as high as £1.90, and we're looking for that while we hold above the recent support in the low 140s. RSI persistently bouncing off the neutral 50 level, which tends to be a decent continuation signal. And obviously we've had the unfilled gap to the upside, which we had at the end of February, to back up that situation. On to the last three. First is Smith & Nephew, which is if there's any of the stocks here today which say I like, this would be one of them. The reason for saying that is that we've had a bear trap island reversal, so we gapped down last month and gapped higher this month, and rising 50-day moving average as well. So that suggests that the breakout here is a good one. Above £12.50, we're looking for the shares to hit the top of that rising trend channel from back in June last year as high as £14. That could happen as soon as the end of next month. Senior engineering, a situation which is also looking as though it's making good on that post-October recovery. Here we've broken up of the 50-day moving average, which is now rising. Great hammer candle on Thursday, so above £1.60, looking for as high as £2 by the end of next month, with the 50 and 200-day lines both now rising. Moving on to Sainsbury, and here you can see the rising trend channel in place since June last year. We had a bear trap gap rebound. We also had a unfilled gap to the upside. So this is looking like a very strong situation indeed. Sideways consolidation above the 50-day moving average, which suggests really any break of £2.85 could take the shares up to £3.40 very quickly over the following 6 to 8 weeks. So maybe as soon as the end of next month, but certainly looking for £3.40 by the end of June. That's it from me today. More UK chart breakers every week.